It's quiz time.
I like quiz time.
Ding, ding.
Ding, ding.
Okay, here's questions from 2 weeks ago.
I know, we took a week off.
So pull out your answers. Let's see how you did.
Go to Zion National Park. Oh, I'm sorry, that's not a question.
It's beautiful
It's
there.
beautiful
Go.
there.
Okay, so the first question is, why do we look out the foggy windshield?
Because if you just look out the rearview mirror, you can easily drive off a cliff. It's the future that matters, and so we talk about it quite a bit because that's what makes a difference.
Okay. What are the potential curves ahead out the foggy windshield?
Well, we talked about them all last week, so it was like a laundry list, or 2 weeks ago. EU crisis, we talked about that again. China crisis, China is definitely unsustainable. We just don't know when it's going to hit a crisis mode. Our own debt ceiling is a potential crisis, August 2nd, supposedly the date there. The end of QE2 is coming up at the end of this month. What will happen with interest rates there is another problem. The end of the fiscal stimulus, Summers is already talking about, let's extend it. Well, that hasn't happened yet. GDP is falling. All the companies are reducing their numbers for GDP forecasts going forward, which will lower the stock market. And there's potential of a double-dip recession coming back into play.
Is that it?
Well,
basically
enough. We're losing confidence, and that's not good because that means less spending.
Next question is, how do you calculate an expected return?
Well, expected return is essentially a weighted average, which we taught you last week. And of course, the important thing there is getting the weightings correct. What is the probability of recession? What's the probability of good economic times, etc.? Get the probabilities and the weighting right, the math is easy.
And last of all, do we even need a stock market?
Yeah, well, when it's going down, we don't feel like we should, right? I mean, it's not good when it's going down. Yes, we need a stock market, absolutely, positively. It brings capital to companies and allows liquidity for those that own shares to sell their shares and other people to buy into the companies. It sets a pricing mechanism. We absolutely need a stock market. Our world would be horse and buggy without it.
And what do you have for us this week?
A few easy questions. Question 1 is, what is the likely outcome of the Greek situation? Question 2 is, how can we avoid a lost decade? 3 is, what is the paradox of thrift? And 4, you'll have to stay tuned for this one, is how do I pick and buy a car? So if you're in car shopping mode, hang on to that one and we'll answer it in just a minute.